Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8546 mark, and here on TradingView the market is down by 2.55%. and in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances. And I'll kickstart the video by giving a brief of what has been happening here on the Polygon Matic chart. From the all-time high, we had been seeing lower prices in this massive ABC corrective movement, which took us back to around the $0.32 mark. And after seeing that low, I've been expecting a very nice bounce to the upper side, obeying this Elliott structure, having a wave 5 taking us back to an all-time high in the next bull market. But before we get to an all-time high, we first needed to see that first wave to the upper side, and I believe that is what has been playing out here on the Polygon Matic chart, and we have fully maximized the formation of that first wave to the upper side. And now my primary scenario is that we are now in the formation of this higher Elliott wave count 2, and getting to the 4-hour chart for further analysis. Here on the 4-hour chart, you can see I have this Elliott wave structure in yellow, which is a fractal wave within that first wave to the upper side, which Polygon Matic has been obeying to the upper side. And getting a little bit into the details of the formation of this Elliott wave structure, after seeing our low at around the $0.32 mark, we saw a very nice bounce to the upper side, making the high for that first wave, then retraced in the formation of a wave 2, continued pushing higher in the formation of a wave 3, making our peak at around the $1.16 mark. And after seeing that high, we have been retracing over here in the formation of a higher in the formation of a wave 4, which I had a target area between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $0.81 mark and the $0.66 mark, which is a target area that we retraced into in the formation of that wave 4, then continued pushing higher in the formation of this wave 5, which I expected to complete the formation of that higher Elliott wave count 1. And because a wave 5 is an impulsive wave, I also expected to see fractal waves in formation within that fifth wave to the upper side, and we are seeing such a structure right here in this blue Elliott wave structure that I have over there. And zooming out so that we can get to see whether that first wave to the upper side has done the minimum that we expect a wave 1 to the upper side to do, by connecting the fibs from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of the wave 3. That gives me a minimum target area to the upper side at the fib level 0.618, and that is at around the $1.25 mark. And in the high that you have here on the charts, we made our high at around the $1.3 mark, meaning we fully maximized the formation of that first wave to the upper side. And whatever we are seeing now is a retracement to the lower side in the formation of this higher Elliott wave count 2. And I can start by sketching out a minimum retracement area to the lower side in the formation of that higher Elliott wave count 2, using the Fibonacci's, connecting them from the low of the first wave to the high of the wave 1, and that gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, which perfectly lies between the 0.8 and the $0.69 mark. So that is my minimum retracement area to the lower side in the formation of that higher Elliott wave count 2. And we have been seeing chart patterns that are supporting that movement to the lower side. Like after making our high for the formation of that first wave, we saw the formation of a double top, which is a chart pattern that normally breaks to the lower side, having the target area of the breakout as the height between the tops and the neckline. So using a trend line, I got that height and placed it below the neckline, giving me a minimum target area back to around the $0.96 mark, which is a target area that we have fully maximized. Went back to around the fib level 0.5, so a reaction of the fib level 0.5 gave us that bounce to the upper side, making another peak at around the $1.17 mark. And because a higher Elliott wave count 2 is a corrective wave, I also expected to see an ABC corrective structure play out over here, and I believe we are seeing such a structure, having this as the wave A, then a wave B making its peak at around the $1.17 mark. Then I'm expecting even lower prices to get us fully into this red target area in the formation of that wave C, and that wave C is what is going to fully maximize the formation of this higher Elliott wave count 2, and that gives me the primary scenarios that I expect and that gives me my primary scenario that I expect to play out here on the Polygon Matic chart, which is we are going to continue seeing lower prices get into this red target area between the $0.8 mark and the $0.69 mark, and once we make the low for that higher Elliott wave count 2, then we can expect an impulsive movement to the upper side in the formation of a higher Elliott wave count 3. And for now, here on the 4-hour chart, you can see we are trading below the 20-day MA, which is now acting as resistance. We also trading below the key area of resistance at around the $0.95 mark. Also jumping to the 1-hour chart so that we can see what chart patterns we have information over here. Within the formation of that wave C, we had been trading within this channel. We managed to break out of the channel to the upper side, faced the key area of resistance at around the $0.95 mark. So a retest of that key area of resistance, and after seeing a retest, whatever we expect after seeing such a retest over here is a movement that is going to continue pushing the price even lower, and that fully supports the formation of this wave C and the formation of that higher Elliott wave count 2. And we also trading below the 20-day MA here on the 1-hour chart, and that means it is also acting as resistance here on the 1-hour chart. And to fully maximize the formation of that higher Elliott wave count 2, we also need to lose the key area of support at around the $0.78 mark, because there are chances that we might get to that key area of support. It gives us support and we see another bounce to the upper side, and in case that happens, then our wave 2 will not have come to a complete. We need to lose it, maybe even see a retest of that key area of support on the lower side. Then once the retest is in, and once the retest is in, we can fully maximize our target area in the formation of that higher Elliott wave count 2. Also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 34 mark, meaning we have a bit of room for us to support any movements to the lower side before we get into the oversold region. Also taking a look at the MACD, here on the MACD we have printed a bearish cross. We are just about to print a bearish cross, and you can see we are losing the buying momentum here on the MACD, indicating that lower prices are coming our way and soon we might print a bearish cross. And that's the update for Polygon Matic.